Good morning, everybody. How's everyone doing this morning? Hopefully everybody's doing great. It's a Friday. It's the last day of the week, March 24th, 8:30. Good morning, good morning, good morning. All right, brand new trading day. Let's go. So what do we see here on the economic calendar to round out our week? It's going to be pretty quiet, or it shouldn't. It should be. This should be less impactful, although it seems like a big deal. Flash services and manufacturing PMI. We know that the market's really reacting to what's been going on with the economic projections, Fed funds rate, and most importantly, what was said during the press conference and kind of the dilemma between Yellen and Powell there. So, although, yes, this is technically a red star event, I wouldn't, it's just worth noting there might be some volatility at 9:45. Don't really think it's going to be anything that changes the direction of the market right now. So anyhow, that's what we have on the docket for today. As we just preview next week, we know that some things are kind of important here really towards the end of the week. We get the final GDP and unemployment claims as always, and then core PCE is on Friday at 8:30 next week. So a week from today, 8:30, core PCE. We will be tuning in live at 8:15. I know it's pretty early. We're still a week out, but we'll be live 8:15 on that particular morning so we can catch the live market reaction. Okay? That's what we've got on the calendar. Let's take a look at some stock-specific headlines here this morning and see what's going on. At the very top, Deutsche Bank shares slide 13% after a sudden spike in the cost of insuring against its default. Right? So there's still just a ton of uncertainty around the whole banking sector right now, the financial sector. It's not... We haven't really seen like this issue resolve. I mean, there have been some pockets of like, okay, the SVB thing is kind of in the rearview mirror. We have some other things in the rearview mirror, like Credit Suisse kind of blowing up, First Republic, right? So those things have happened, but there continues to be like the next thing and the next thing and the next thing. And until there's no longer a next thing going wrong in the financial industry, you're going to have people who are just like very, very skeptical, and rightfully so. Rightfully so. And obviously, as the I don't know if it's the fourth or third now. I can't recall if consumer discretionary took the third place heaviest weighted sector, but regardless, financials are fairly heavyweight and they're definitely more of a risk on indication. So the big headline here, not all that positive for our markets. And obviously we know markets are down. I mean, you can see by the glaring red right across the top of the screen that almost everything is down out there this morning. Costco looking to maintain its edge over Sam's Club. As the hearings have been going on in DC, TikTok, China, what's going on with the US data, all that stuff is taking place right now. What else do we see? And Meta should be the beneficiary of that, right? In theory. What else? More banking headlines, right? Basically, banking troubles right here. Banking troubles right here. This is an upgrade from Deutsche Bank. I'm just kind of getting wrapped up in what was going on here, but the Accenture stock, which reported after the close yesterday, is getting a bit of an upgrade there. What else? Biggest movers pre-market. Deutsche Bank, Coinbase, Block on the Hindenburg research report. That's my weekend homework. If you don't have anything to do this weekend, I would suggest probably reading the report from Hindenburg. I'm going to take a quick glance through it this weekend and see what's really going on there, but just know the stock is obviously not enjoying that report. What else? Banks ramp up use of new Fed facilities created during the crisis. So that's that borrowing sort of facility, so to speak. In theory, short-term borrowing, right? They can trade their assets off one-to-one, even if they're underwater. What else is going on here? Block stock plunges 15% after the Hindenburg report. So obviously getting beat up there. What else is going on? Ford plans to build 500,000 EVs annually at its $5.6 billion Tennessee campus. Interesting. We know that they just took a $2 billion loss, right? Was it $2 billion or $200 million? I can't recall. But yesterday the headline was they lost on EVs, but that could be the price to pay just to get into the industry. What else? France is really up in arms. I was seeing some things online last night, and I just, at first I didn't really know how bad it was, but France is really not in a great place right now. Really not a great place. So, if you've got people in France, then number one, hopefully they're not getting hurt in these uproars. But it seems like it's time for a change over there. That's kind of what we'll say about that. What else is going on here? Crypto's banned in China. What else? King Charles' visit to France postponed after France protests. Something on fire in the background there. Makes sense. Yellen making more kind of comments about the banks, causing some volatility. What else? Anything stock specific? Not really. Oil pullbacks. Goldman Sachs is interested in. Activision fails to increase representation of women and non-binary people as a 2025 goal. The goal of the company should be to grow the stock. Okay, this is not a goal. The company should grow the stock. If they need more diverse opinions to grow the stock, then of course you hire anybody who is proficient at the job. If they are proficient at the job, it does not matter what gender they are. It does not matter what their orientation is. You hire based on proficiencies and aiming to increase the value of the stock if you are a public company. We'll leave it at that. Downgrade to Block after the lack of clarity and the Hindenburg report. And that's it. That is it here in the headlines. Nothing really crazy out there in my estimation. All right, moving along. What's on the earnings calendar? Earnings from Thursday, General Mills, Accenture, we just saw in the headlines in Darden. Nothing to watch on this morning session, basically useless. And next week, This calendar, usually gets clearer and clearer and clearer as time goes on. So this is subject to change. But as of right now, the big names to watch: Carnival potentially on Monday. As we move forward, Lululemon. I'm not going to say Melon this time. Lululemon. Micron is the big one as well. I would probably keep all of my focus on Micron from an earnings perspective next week, and nothing else that really strikes me as interesting. Paychex, maybe they might have some insight into what's going on in the jobs market right now. But this is like, boom, probably not really that important to pay attention to. If I had to just narrow it down, it's Micron. Okay, that's next week's for an earnings perspective. Let's get on over to the platform and do what we do best and see what's going on with our ES futures on the lovely 4-hour time frame chart. This feels like home. All right, we'll jump right into the analysis. But first, who is here in the chat going all the way up to the top? We've got Jay Hicks, Chris C, INF, the based homie, of course. We've got I butchered this one the other day. No small talks. That one's going to throw me for a loop. But anyways, good morning to you. We'll call you Mr. N for now. We've got Nick Farrell, Michael, Steve Valois. We've got the original Rude Boy, Davey Day Trader, Michael, Roger Tutt, Ryan Speed, Rolando Bluefish Aquariums, Gregory Rulo, good morning. We've got Philip M, good morning. Joel, Catherine Neighbor J, Quest of Quests. We've got Lil T, Todd Scholes, Buckminster Wallace, DP, Cipriano, Mark, Michael G, Deborah. Who else is here? We've got Mora Maker, Majestus, Capitalist Dog, Siege, M. Spears, Willow Puff, Victor Y, good morning. Jay Cortina, good morning. Abel, good morning. Nice to see you. Infornity, Thule, Bob C. Got John Cardozo, Byron Jones, Maria, Ike Wells, Ty, Raz, Starlight, Jay with the gold cash bag, and who else? The Sandman, Crypto Commando. Good morning, good morning, good morning. All right, we got them all. Let's dive into the 4-hour price action. All right, what do we see here in front of us? Obviously, a pretty key breakdown on this morning session. This is our range. We talked about the close underneath on the Wednesday session here in the midweek market update. Yesterday, we were being mindful of the squeeze over the spike. Recall that 4,005. We'll see this on the hourly chart in just a second. But recall that 4,005 could have produced a short squeeze, and that is exactly what we got on the prior day session. It was not new money buying. I'll show you that on the internals in just a moment. We do technically have a lower high being produced on the bar-to-bar count, if we were looking at daily bars, for example. And we did just make a new lower low, right? We've closed here on the regular trading hour session, and we are trading underneath that low. Very small, but we're trading underneath that low. And most importantly, from a structural perspective, we are trading underneath the top of the balance area from here. Here, it tried to act as support, obviously did not hold on the prior day session. So all things considered, the bears are making some headway back down into this range, and in theory, we should be looking for the bottom end of the range here, much closer to our lows, much closer to our lows. Like we'll see this on the hourly chart pretty clear, okay? So bottom end of the range should be the target on a move like this. We know that the 4-hour trend remains down if we unisolate, so to speak, the price action. We're still on a downtrend, right? Highs, lower highs, lower highs, lower highs, lower highs have been found. This is a big deal that we were talking about on the SPY daily chart in the midweek market update. And now it looks like we're also, if you were a proponent of the hourly channel that was looking like this, and it was reasonable to be saying, okay, this is kind of still in play until it's not. The thumbnail for Wednesday's video was, hey, trendline break could be around the corner. And this should send us, in theory, there we go, to the bottom end of the range. The classic saying is that when you break the trend line, you just fill up the triangle. What's the triangle? It's your next support. Right? So drawing a triangle, that's where you go. This is the triangle. Boom. Let's go back to geometry, and what was that, like high school, middle school math? I can't even remember these days, but hopefully they're still teaching the kids these things. We've got a right triangle here, right? We're looking for this area right here. All right? Folks, let me know in the chat, what is this? What is this called in a triangle? The longest side. I just need to make sure that, we're all up to date on our geometry. What's that called? That'll be the vocab word of the day. Maybe we'll start a new segment on the channel. Anyhow, moving on down to the hourly time frame chart. Let's keep this show on the road here. What do we see from a trend perspective when we isolate the price action? Quite clear that we do have our balance area. We do have a look above and fail, and we should be targeting the bottom end of the range here where we had prior support. This didn't quite come into it in the pre-market session, but we remember, right, we talked about this, how this was a failure to really accept underneath these lows on the initial look above and fail, right? So all things held equal, I would be looking for the bottom end of the range as a target over time here on this second and larger time frame look above and fail, with the 4-hour lower high being firmly in place. Hypotenuse, good to know that the chat is smart. Good to know that the chat is smart, and we're nailing our vocab here this morning. Everybody passed geometry, it seems. But we've got our highs. We've got a lower high now on the bar-to-bar count, as we were just talking about on the 4-hour, but it's pronounced here on the hourly as well, right? So no longer do we have lows, higher lows, higher lows, higher lows, because now we have a lower low here to here. But we also don't really have highs, higher highs, higher highs, higher highs, or I mean, you could go all the way up here, but right, higher highs, right? This is a lower high, equal/lower high. So the trend is definitely shifting. It's more neutral, but obviously favoring the bears from a pattern perspective on the hourly chart if we think about what's going on here. So we've hit that point. Everybody should know at this time, right? We're inside the balance range, and in time, over time, theory would tell us we should go here, bottom end of the range. That number is much closer to 38.85, 38.90. 38.85, 38.90 in the ES. Okay, that's the downside. Let's move along and take a look at the 15-minute chart, see what's going on from a more nuanced perspective. We'll ask ourselves the 3 questions that we're always asking to get a better grasp on what should unfold on the open. Question number 1, where are we opening in relationship to the prior day's range? Here is the high, here is the low. We're opening right at the prior low, but technically speaking, we do have a very minor gap down. So we'll call a spade and draw on a down arrow here for question number 1. We're opening on a gap down. That, of course, puts gap rules in play, but not all gap rules are created equal. We'll talk about why in just a second, but the remainder of the 3 questions will really sort of illustrate why. Question number 2, where are we opening in relationship to the overnight range? Here's the high, here is the low. We're opening closer to the overnight low, so another bearish data point here. But it actually sets up favorable bullish risk reward, so not ideal for our gap rules being so close to the prior low of day. I'm kind of hinting at why gap rules are not all equal. Anyways, question number 3, last but certainly not least, what is the overnight inventory position? To do that, you just extrapolate the settling price, same thing as saying the closing price from the prior day's session. How much time was spent above? How much time was spent below? And what we can see here is it's fairly equal, but obviously as you get closer to the bell, we talk about this phenomenon all the time. As you get closer to the bell, usually volume increases as you start getting those foreign opens, things like the Europe Open, right? The German Open, those types of things. So as this sort of increases in volume, I would say it's probably leaning a little bit more net short than net long, especially the fact that this move overall hasn't really found a rally to retrace any of it. So probably leaning more net short, but maybe only to the degree of, I don't know, let's go like 70%. It's not 100% net short. That's clear as day, right? We do have some activity above the prior day's close. So 70% net short, great. All right, the 3 questions. Why are they important? What do they tell us? Why are not all gap rules created equal? Well, if we think about where we're at, we're not really all that far removed from the prior day's range. Sure, technically speaking, it is a gap, but at this point in time, it's hard. It's a what is this? Like a 1.5 point gap, maybe. And that's obviously wiggling around, subject to change, but you're not going to trade a 1.5 point gap for the gap rules on the fade, right? I mean, it just doesn't make sense to long this for the gap fill if that's the area, right? And I mean, obviously we're exaggerating here. I'm not saying anybody in the chat would do that, but I mean, just think about this thing logically. You're not gonna take 1.5 points of trade to risk the overnight low, right? So I don't know, just a funny example on this morning session, just how pronounced this is in opening right at the prior low of day. So although it's a gap, it's not something that we want to be fading, obviously. Now, question number 2, we're close enough still to the overnight low, and you'll notice that we are getting hammers down here. We are getting some buyers stepping in, lower wicks, right? Market's not really continuing this rapid descent. That it's not really, it's not so clear that it's just a long into this rapid descent. It does strike me as like bearish consolidation that's attempting to stay underneath the prior day's session. If it does make a move in the long direction, right? Technically speaking, we have to contend with the top of the range, this 39.70 area. Depends on how the open shakes out. So this, it's as we say, gap rules are always in play. It doesn't matter. Gap rules are always in play, but whether or not we want to take that trade is a different story. So we're not thinking about this to take this trade here. I would say that the primary objective of the open is just determining where does the market find acceptance, above or below the prior low of day. It's as simple as that in the ES. Right? Does the market pop back in? Do we find some support inside the prior day's range? If so, you better believe any breaks once again of 39.70. I think it's just going to be a vicious cycle of squeeze the shorts, right? I'm not saying new money buyers are going to step in and send this market up to 40, 25, 40, 50, any upside targets that we have. I'm not saying that, but look at what happened here. Violent action into the close yesterday, right? And if shorts were piling in and all of a sudden we're not really accepting underneath the prior low of day, let's say for some reason we do this and then get a higher low above 39.70, I think the shorts just squeeze again. So I'm not saying strong buyers, I'm just saying shorts, you're kind of in hot water if you're positioned at poor location. Now, we know from the higher time frame patterns. Let's bring this all back to reality. What is the more likely situation on a day like today, considering everything we know about the 4-hour time frame, considering everything we know about the hourly time frame? This is where context is just like utterly important, and you can't get wrapped up in the granularity of like a 15-minute chart, right? This is why it's important to go through from a top-down perspective and understand everything that's going on, right? Sure, even if we accept in the prior day's range, if we're underneath 39.70, what's going on the higher time frames? Well, we've just found another lower high. We've made a lower low. We're probably just looking for another lower high at 39.70, right? We recall, I'm just going to draw this in visually up here. I'm not going to zoom out on the chart, but this was a balance area. We saw a look above, partial fail. We saw a look above, and now we're back down into the range, right? This here represents the top of the range. We're just looking for a lower high underneath, something that does this. Lower high underneath, something that targets the bottom end of the range, right? Something that does that. So the context from the 4-hour and hourly are probably giving us more of a bearish edge and saying that, hey, we probably want to see rejections of 39.70. We want to look for short opportunities here if the market gets above the prior low of day and starts consolidating. We want to look for a break and a stuff. Break, stuff, right? Just no acceptance around 39.70. So that's what the high time frames are telling us. Obviously, the other outcome would just be we don't get any acceptance above the prior low of day, and we just look for downward continuation. Matt, how do you trade downward continuation when we don't really have a prior day's level to trade against? It's quite simple. You look for bounces. You look for the term dead cat bounce. I've been getting some flack on the channel for using the term dead cat bounce, and someone actually brought up a reasonable point. Someone said, what if you replace the cat with a dog? Would you still want to say that? Would you want to say dead dog bounce? Not really. Not at all, So I've got a little bit of sympathy for the cats out there. But anyways, it's an industry term. We might continue to use it. We might try to be mindful of it when it strikes us to remember. But anyhow, if we see a bounce, right? So market slides, it's not getting any acceptance underneath the prior low of day. Market slides, you're looking for a bounce that retraces into a descending VWAP. You're looking for a bounce that is a lower high underneath the overnight low. Right? So these are the things that you just want to be mindful of in the downward direction if the market just gets straight up continuation and we can't really position against a level from the prior day session. Okay, so that's what I've kind of got for you on the ES. This morning's session is a little bit murky considering that we're opening right at the prior low of day. Again, gap rules technically are in play, but there's nothing about this chart setup that really suggests there's something easy to do structurally on the open. So waiting for some resolution of the prior low of day. All right. Let's continue and just sort of outline the scenarios in one drawing. I'll rank order them for you. So situation number 1, what I would prefer to see for our markets, because of the 4-hour and hourly structure and the context being bearish, I would love to see opening range here pop that finds a lower high underneath 39.70, looking to onboard shorts and trade this thing in the downward direction towards the bottom end of the range. That's situation number 1. Situation number 2, which I would not really be too fond of, but it's unfortunately a reasonable situation to unfold, is that if we go here and then pop, but never really break down under the opening range, under the opening print, I think we have sort of a stalemate on today's session, where you get chopped up in this area here, and the market kind of does nothing on a Friday, and we'll wait for more information next week. Right? So that's a possibility as well. And unfortunately, I think it's a higher probability outcome than we might think. And then number 3, of course, is short squeeze 2.0. Here's short squeeze 1.0 from the prior day session. Short squeeze 2.0 today is boom, higher low above 39.70. I think boom, that's 2.0. Bring it on. Not new money buyers. We're not arguing that the market's going to new all-time highs. We're just saying that shorts with poor position here will be squeezed out. That's all. Okay, so that's 1, 2, and 3 for me in terms of rank ordering the situations on today's session. Let's go ahead and take a crack at what the chat seems to think is likely for today. All right, so here we go. If you're a market bull thinking that we do get short squeeze 2.0, acceptance in the prior day's range, higher low, and boom, off to the races. Let's see a number 1 in the chat. You are a market bull. If you're a little bit more neutral, thinking that you're going to get situation number 2, so balance, doing something like this, whatever, really more sideways, not really getting too much acceptance back above the top of the range. So I would say on a situation number 2 today, you're still looking for a bearish development with price action primarily remaining underneath 39.70. That's a number 2 for today. And obviously bears just want to see that opening range breakdown, lower high, continuation to the bottom end of the range at what was that? 38.85. 38.85. That's situation number 3. If you've got no idea what's going to unfold on this morning session, a number 4 is the number for you, and we'll type in the official clickable YouTube poll in just a moment here. So let's do this here. What do you think? Question marks. 1 is bullish. Number 2 is bearish. Nope, it's actually Newt. Newt. Getting ahead of myself. 3 is bearish. And 4 is ostrich. Good. Clickable YouTube poll is out there in the world for all of our lurkers who would prefer to interact that way and not make themselves known in the chat. I'm going to scroll on up to the very tippity top, see what we've missed for comments from the chat. One thing I do recall is that our good friend INF in the chat used to say it's a Fed cat bounce. And that's a term that he coined. All right? So I'm not taking credit for that one. I'd like to give INF credit for Fed cat bounce. That's a term that we can use whenever the Fed bounces the market after a big downtrend. All right? Fed comes to save the day. Oh, we've got a Fed cat bounce. All right? So let's thank INF for the new terminology, and we'll move into our responses. Lots of 1s and 2s early on, a couple 3s sprinkled in there as well, which is interesting so early in the poll results. But as I move lower, lots of 2s, lots and lots of 2s on today's session. A lot of folks are feeling neutral, which is interesting because there's a big divergence between what the clickable YouTube poll is telling us. 48% response rate bearish. 48% response rate on the bear side. But I'm seeing lots of 2s in the chat. I mean, don't get me wrong. There's a fair share of 3s, but 2s seem to be overwhelming. As I get lower through the list, it definitely does switch up towards 3s, so maybe I should have been a bit patient there. Anyhow, yep, wow, very, very clear flip to 3s towards the bottom. Cool. All right. No, man, that was you. That was you, INF. At least as far as I'm concerned, I thought it was you who came up with Fed cat bounce. Anyhow, if someone else did, then so be it. That someone else can get credit as well. But you're the rightful owner for now. All right, let's move along. Everybody is feeling like a number 3 is in the cards for today's session on the ES. I personally, again, think that a number 2 is reasonable, or I would like to see a number 3 develop with a lower high off of 39.70. Right, so I'm kind of thinking number 2 personally that might morph into a number 3 later on in the day, and then number 1. I mean, unfortunately, it's just something that we have to deal with if we get higher lows above 39.70. All right, so you'll know what side of the trade to be on. If we're above 39.70, you probably don't want to be short, right? Otherwise, if you are short, you're going to be one of the people who fuels the short squeeze in the upward direction. All right, so just be mindful of 39.70 still top of the balance range. All right, let's move along. NQ. Let's see what's going on. Yeah, it is a Friday. It's a Friday. Friday rules are in place. We'll talk about Friday rules after we round out the futures segment of the show. All right. So NQ, what's going on with the NQ? If we just leave this zoomed out, I mean, clear as day, big divergence, nowhere near the top of its range from down here, still hanging out up here towards the highs. Lack of representation of financials in the NQ is obviously why there's relative strength here. You'll note that we have 4-hour lows, higher lows, higher lows, higher lows. Never even came close to 12.6 yesterday. On this sort of wild flush, it did not make a lower low here. It did not break down under key support. So NQ, just clear relative strength. I mean, that goes without saying. We are coming off of a higher high up here on the 4-hour chart. Recall that on the 4-hour, you can really be a bit broader in the pivots that take place. So I would not call this like a 4-hour lower high on the bar-to-bar count. I mean, if you're looking at a daily candle, yes, bar to bar, we did make a lower high. But from a 4-hour pivot perspective, right, we're really looking at like a lower high would be something like this, right? Somewhere a bit, I don't want to say further out. It doesn't necessarily have to be via time, but like something that's more significant. This is not really significant on a 4-hour perspective, that is. So all things held equal, still in an uptrend, still sitting on higher highs, kind of getting neutral consolidation, not so much any big breaks, right? So let's go ahead and move on down to an hourly chart. We know that there's a bullish edge here. Let's make sure our levels are still fairly accurate. There is something that's taking place here, right? This is kind of an interesting zone. I don't want to be, I mean, the levels, they're all, how should we do this? Let me make sure. Let me make sure. So like the one thing I'm noting here is that this, although it was prior resistance turned to support here, big violation on the Fed speak, kind of chopped through it. So I want to say that this level has almost been invalidated based on the regular trading hour session, excuse me. So let's go ahead and get rid of that. And I think the market, I mean, you can see clear as day, the new focus is probably right around in here, right? Something like this. I'm even tempted to make it a wider zone and include yesterday's low, but something about it seems like a bit of a stretch. I think this might be more appropriate, capturing the highs, and then capturing the lows here, capturing this low, of course, here as well. So instead of what we were just looking at, which is a bit higher, somewhere in here, I think this is now a little bit more appropriate, closer to 12.7. So let's go ahead and just bump this out. So it's equal to everything else we've got going on here, and we'll put the extended hours back on and continue to evaluate the charts. So knowing that, I mean, there's support underneath us here. It's not like the NQ risks, a big flush and breaking all the way down into 12.3. Although 12.3 would be the next zone target down here, it's got to break this low, it's got to break this low, right? So there's a lot that has to happen before it's an outright collapse in the NQ, is what we're getting at. That's the gist of the hourly time frame chart. And if we zoom in here and isolate the price action, hard to say anything other than a bullish trend is in place, right? We've got lows, higher lows, higher lows. Along the way, we've got highs, higher highs, and this is kind of a neutral interaction up here, right, between today and yesterday. Or excuse me, yesterday and the day prior, Thursday and Wednesday and Thursday. Let's just use the proper names of the days. So that's kind of, this is what's going on. Relative strength, a lot of support underneath us still. There's no just obvious interaction that the market's going to go to 12.3. All right, and as we pointed out in the Wednesday video, again, I don't have any expectations that anybody watched the Wednesday video. It came out at midnight. We know that, whatever. The number one dynamic in this market, if you're trying to navigate the S&P breakdown, if you're trying to navigate a market collapse, it's all going to boil down to the dynamic of tech being the most heavyweight component of the S&P and the relative strength here preventing the SPYs from just breaking down and moving to the bottom of the range, right? If the NQ remains in this box today, if it doesn't see an aggressive break at least to 12.6, it's going to be fairly difficult for that spiders to continue, the SPOOs, the spiders, whatever you want to call them, give them some nickname, whatever. It's going to be difficult for them to move in the downward direction, right? That's kind of what we're getting at here. So sitting at support in a 2-day range after an inside bar on the NQ, it's not so clear that the market's just going to flush in the SPY, right? One thing to be mindful of is, yes, if 12.7 breaks, an inside bar breakdown should always be slightly more powerful than just, continuation of a move. This is really beginning the move. This would be step one. So we want to be very, very mindful of 12.7. But opening near support in an overall uptrend where there's clear relative strength compared to the rest of the market, I would not just be on board for like an outright collapse into 12.3. I might eat my words today. I don't know. But until we actually break, until we're getting prices that are printing underneath 12.7, I'm not convinced that the market's going to zero. I'm not convinced. So we've got 100 points of cushion based on where we're currently trading. Let's move along and take a look at the 15-minute chart and see what the opening indications would tell us. Very similar to our spot. Actually, not similar at all. What am I saying? Not even close. Let's look at the chart in front of us, Matt, before we start speaking. Question number 1. We're opening inside the prior day's range. Here's the high, here's the low. Obviously, we're opening inside. The SPY and the ES is opening on either a gap down or just right at the prior low of day. So that's immediately a big difference. No gap here in the NQ, which tells us neutral. Which always tells us, ask question 1.5, where are we opening in relationship to the prior day's value area? Here's value area low, here is value area high. We are opening underneath, which is a slightly more bearish perspective, but once again, still balanced from question number 1. So neutral to maybe a little bit of a bearish edge, but the higher time frame structures support the idea that we're still in an uptrend. There's still relative strength here. Question number 2. Hang on, folks, 1 second. My apologies. I need a sip of water after that. All right. Good. Question number 2. Where are we opening in relationship to the overnight range? Here's the overnight high. Here is the overnight. Said that backwards. Overnight low, overnight high. Opening inside the overnight range, obviously, by fact of being in the overnight range still, being in the overnight session still. But we are opening in the lower third of the overnight range. So once again, a little bit more of a bearish indication here. Does it set up decent risk reward for the upswing? Actually, yes. Being closer to the inside bar low sets up risk reward here for like some kind of whatever reversal off of support. Could be like a higher low double bottom. It could be an ascending triangle. Could be a number of things down here. Doesn't really matter. But risk reward is actually more favorable for the upswing, right? So that's that. If we break, then it's all about finding the lower high underneath, right? We'll talk about that situation after we talk about question number 3. What is the overnight inventory position, net long, net short? Here's the settling price, how much time above, how much time below. Obviously, a little bit more time was spent above the settling price as this was taking place. So this is much more 50-50 balanced, right? This is not even close to saying that there's a major imbalance, a major skew in the overnight inventory. You'd be hard pressed to say that. So all things considered, I do think that the NQ is it's the main marker of the market right now. It's the main thing to be watching out for. I think that consolidation here threatens a squeeze as bears don't get their way, as we stop making a new lower low from the inside bar. So anything that kind of consolidates above the overnight low, above the prior low of day, I think the risk and the threat is for a squeeze here. As we just pointed out, if we break underneath these lows, if we start taking out 12.7, it's our job to spot the lower high. It's our job to spot the lower high. Why are we not just shorting the breakdown of this area? Because we know, just like we talked about the importance of the higher time frame context in the SPY and the ES from the 4-hour and the hourly, right? The higher time frame context in the NQ tells us that we're still in an uptrend. We are not threatening a downtrend. We're hanging out right at the highs, basically. So context means, all right, if we know we're in an uptrend, we don't really want to be shorting breakdowns. We want confirmation of lower highs. So it's got to be a lower high here. It's got to be a lower high underneath 12.7. Consolidation break. Fine. If this happens, we will change our tone. I will be the first one to admit I will raise my hand. And in the Discord, I'll raise my hand and say, hey, we're changing our tone. We have a lower high underneath 12.7. Maybe the NQ falls and drags the S&Ps with it. All right, that's the NQ. We've got 9:06 on the clock. Maybe we've had too much funny business here on a Friday. But let's move along to the Russell and take a look at the higher time frame structures here. This is a big concern for the market. So just like the NQ is a sign of strength for the S&Ps, the IWM and the small caps here are a big sign of weakness for the S&Ps. So markets absolutely breaking at the seams, conflicting information all over the place. Here's a balance range. Here's a nasty bear flag. It's breaking down. It's breaking down. This is a big sign that says, hey, risk off. Nobody wants to be involved in small caps right now. The market conditions are not favorable, not conducive to them outperforming. People don't want to take big bets on these smaller companies that, sure, technically could generate really high return, but nobody sees that as a valuable outcome right now. There's no easy money policy. Nobody's going to come in and print billions of dollars yet, trillions of dollars yet. Maybe we'll return to that at some point in the future. I wouldn't doubt it. But anyhow, right, this is directly conflicting with this NQ relative strength. So if you've been getting chopped up in the market, this is probably why. You're getting massive divergences in the 3 big broad market ETFs, 3 big broad market indexes. Push, pull, getting dragged this way, getting dragged that way. It's not clear, right? So all of this comes together to just say, yes, breaking down. 4-hour structure is bearish. 1700 on the downside, even a little bit lower. 1685, 1687 on the downswing, not totally out of the picture for a session like today. That's coming from, of course, our lows way back over yonder. I got to even grab more time on the 4-hour. Can I do that? Yeah, I can. Sometimes it boots you off. If you're on like an hourly time frame chart, it doesn't let you go more than 180 days or something like that. But here you go, right? This is like we're home. We are home. And if this flushes, oh boy, I think we're in for a whole world of hurt. Personally, I think, remembering that the Russell was the first one to make the equal low here in, to this prior area. It never made the lower low. As the market bottomed in October, right? No new lower low. We know the story about the Russell, right? So if this fails, not really looking great for our markets. So something worth keeping an eye on is this big zone down here, 1685. Like if you want to just use a nice round number, 1685 Russell. If you start seeing prints underneath 1685 in the RTY, run for the hills, right? Is that Metallica? that Metallica or is that someone? Am I getting my bands mixed up here? Someone is most certainly going to correct me in the chat, and I deserve to be corrected on that one, but Run for the Hills, right? So with that, let's move along. Hourly chart. Iron Maiden, should have known better. Golly. Iron Maiden, should have known better. Yeah, I'm getting my bands mixed up here in the morning. Thank you guys. Iron Maiden. Yeah, how could I ugh. Embarrassing. That's it. We're ending the stream. Gotta cut the stream. Anyways, Russell breaking down from the range. The idea here is that we look for lower highs underneath 1730 to keep us outside of the range, right? Obviously, the big 4-hour downtrend, big 100% retracement, big bearish pressure here in the IWM, Russell 2000. The idea is that if it does rally, you want to see shorts up against 1730. If we just get straight up continuation, we know the deal. We're looking for 1685. 1685. All right. That's the IWM. That's the RTY futures. And we will move along. We're not even going to bother with the 15-minute chart there. We're going to move along. I've been seeing some guy talking about OPGN on Twitter, and he seems like a reasonable market participant, trades, the indexes as well, but very, very attached to this particular name. And it's kind of concerning, I think. But anyhow, we'll let that be in the time being. We'll go on over to the spiders, and we'll see what's going on in the cash ETF world. So obviously, we're getting pretty good price acceptance underneath 393.50 in the pre-market session. That is a representation of being back in the balance area. Look above and fail. We are trading around 389, and as we talked about in the midweek market update, kind of looking for the bottom end of the range at 384.75, and that's that on the downswing. Okay, so bearish patterns everywhere. Look above and fail. NQ is the only NQ is the one thing that you're going to want to watch as relative strength that may or may not keep the market from moving lower. If let's just move along to the QQQ, right? Because I think it makes sense to talk about this first. What you want to see if the market's going to break down and see that full continuation is obviously just a flush of this level right here. I believe it's 306. Yeah, 306. 306 in the QQQ wants to break down. It's an inside bar breakdown, right? You can see it over here. 306 breaks down. That's what leads the pullback to 300, which is still totally reasonable from a double bottom perspective. Retest and go, right? So doesn't change anything in the QQQ, but intraday the dynamic would of course be bearish, and that's where finally, yes, you can say in the SPY, we have a breakdown going on in the QQQ. All right, we'll look for the lower bound of the range at 384.75. Okay, so that's the dynamic. I think I'm probably beating a dead horse at this point. That's maybe another one of these idioms that people don't like using for animal abuse reasons, but whatever, it's long standing. You're going to have to put up with it. I feel like I'm beating a dead horse, but the idea is if tech continues to be relatively strong, it's going to be a difficult time to trade this in the downward direction. Don't get me wrong. This bar pattern right here is bearish. This is bearish. But if the QQQs are not cooperating, it's not going to be a fun time trying to short this market. It's just not. It's just not. So that's as simple as I can make it. It's the push and pull between tech, financials, and small caps breaking down. Markets seemingly getting ripped apart at the seams. It's wild out there. I think the FOMC tried to provide clarity on the banking crisis here, but it didn't. Jerome Powell kind of maybe left the door open for some uncertainties still revolving around the banking crisis. Like, oh, how did this happen? What's the investigation going to hold? And then Yellen's comments certainly did not help the other day as well. So tough. It's a tough environment to be trading in. It's really, really tough environment to be trading in. So that's it for comments there. IWM Russell 2000 small caps. We've got 9:13 on the clock, breaking the bottom end of the flag. Of course, we just talked about this. Boom, 171 breakdown. Target is down here. You can see in the cash ETF, right? We're kind of opening around, where are we opening? Right around 168, pretty much at these lows. I think this is, more tradable, not in the futures per se because of the contract roll. If you're going to trade this, I would probably do it in the options market of the IWM. In the IWM, it's just clearer targets, right? Whereas the Russell futures are already opening like here. Don't really have too much room to fall. Don't get me wrong, they could go through it, and on a relative basis, the contract roll, the pricing difference could make it a lower low. But in the IWM, it's a bit more clear. All right, cash market will never lie. The cash market will never lie. All right, That's also why, just as an FYI, a lot of rhyming stuff going on here. The reason we use the 4 p.m. close to grab our value area is just because the cash market doesn't lie. Cash market doesn't lie. Sure, we get that last 15-minute push, 15-minute pump in volume, but the cash market does not lie, which is why your value area may be skewed in one direction or another versus mine if you're using the 4:15 session as well. All right, 9:15, time to go through the core list of companies. All right, here we go. Apple, break, retest, looking for support above 156.50. Range in play, getting a little bit topish in here, right? You can see multiple inverted hammers, upper wicks coming in around this area of resistance. Once again, these did not strike me as new money buyers, just kind of short squeeze. We talked about this phenomenon in yesterday's stream. Hopefully nobody was caught off guard by this. But as we move into today's session, it's really about the back test of 156.50. I think shorts can be on the table to try to catch a pullback. If you want to try to position around 158 for that, right? Something in here. If the market's not moving too fast, it's definitely reasonable to look for that on the downside. Really, you want to see the two equal lows being tested here at 154 on Apple. 154 would be the better sort of downside target in Apple. Oh, look at that. A couple of things to call out. Karen Garcia, thank you so much for the 10. Much appreciated. Love the little emoji sticker thing that you attached there. I don't know if that's supposed to be like a pear flying forward with a cape, but it's cool little animation there. And then we've got Joanna Rodriguez. Thanks for joining as a supporter. Appreciate you. Enjoy that green name. Enjoy the cash bag that will turn gold over time. All right. We talked about Apple. We talked about 156.50 on the pullback. If it just consolidates in the prior day's range, I think it's probably going to be choppy because you have too many mixed opinions going on here. Next up, Netflix. Bit like this, I'll be the first one to step out and say, my goodness, but this totally caught me off guard. Totally caught me off guard. This is just, I didn't see this coming at all. I did not see this coming at all. I thought that 306 was going to offer up resistance, as we were talking about in the stream yesterday. Just rocket ship in the upward direction. I mean, I was not trading this long. I was not shorting this into here. I was not, this just totally caught me off guard. So we'll trade this as it sits. It's trying to play catch up to the tech cohort, I imagine, by getting above its neckline here of a pseudo double bottom. So if it's going to remain in play, it's got to now, like the key job of Netflix is staying above this zone. So because of such a harsh reversal, because this one caught me off guard, I'm probably not going to trade it on today's session just because psychologically I don't want to be like trying to get revenge on something that I thought was going to go the other way, if that makes sense. So this doesn't, to me, like what I would want to see on today's session in Netflix is like proof that this is going to hold a higher low or some continuation higher. If we get continuation higher, then great. We'll look for a short here to capture the pullback, but the structure is now shifted to the bull's favor with a higher low, or at least the opportunity for a higher low over the double bottom neckline. All right. Yeah, Netflix Apple partnership, maybe. I don't know. It could benefit from the TikTok ban. Yeah, I mean, there's a number of there's a number of different things that could be going on from a fundamental perspective, but the move was just so blindsiding yesterday that I don't know that I want to be subjecting myself to psychologically getting involved here. After such let's be honest, as traders we have egos, right? We have egos. Everybody has an ego, not to get too like woo woo about the subject, but you have an ego, and my thought was, okay, we're going to look for Netflix shorts on like rejections of 306 yesterday. When that doesn't happen, it's a hit, right? It's definitely a little bit of a hit to you, which is why it's so difficult to close a losing trade. Right? So it's something that you got to manage and deal with. And one of the ways that I manage and deal with being wrong is like, hey, if something like this is so like blatantly blowing up in your face from your original line of thinking, might be worth just to take a step back, reevaluate, let some things settle out. Netflix is not going to be the only stock that has a good move on today's session, right? The ES always has something for you. The NQ always has something for you, although I prefer not to trade the NQ because I'm a baby and I can't handle those big ranges. But anyhow, there's always something to do. So, let's not pigeonhole ourselves into Netflix. From a technical perspective, in case you want to trade it on today's session, I would say that there's a decent breakout point here around 322. If it goes, you're just looking for continuation of this momentum in the upward direction. 332.50, 50 SMA comes into view. Otherwise, consolidation above 312, as we just pointed out, technically constructive on the upswing with a double bottom neckline retest over this area. Okay? So we'll leave it off at that. Next up is Tesla. What's going on with Tessie? Mr. Musk, how you doing? What is going on over here in Tesla? We are accepting in the range. This is what we wanted to see early in the session. Recall that we were opening up here. It didn't really give us the opportunity to look for a buy at 188.50. Folks, I'm done trading usually by like 3 p.m. I'm away from the screens doing something else at that point. So like, people say all the time like, oh, there's good opportunity, power hour, whatever. For me, it's not the session I trade. Now, this is kind of ideally what we were looking for, but earlier in the session for a stronger bounce off of 188.50. So the fact that it happens late in the day, it's not really tradable here, but look at where we're opening. We're opening right around this area again. So if buyers showed up here in the afternoon yesterday, are they going to show up once again here in the morning session at 188.50, which as we know in Tesla represents the bottom end of the range here? Can we find some kind of like setup, intraday double bottom, inverted head and shoulders, whatever, that keeps us in the range, right? I would be looking at this very closely on the open, 188.50 on Tesla. Ideally, we support this 3-day balance range. Maybe there's a quick sweep of the lows, but then we're coming right back in, right? It could look something like this, big nasty red bar. Engulfer back in the upward direction, and then like, doji, whatever. Not entirely sure how it plays out, but a sweep of the lows, grab the stops underneath prior low of day, and then rotate back to the top of the range, 200. Definitely worth watching. 188.50, 188.50, the dynamic here and here on Tesla, very, very interesting for this morning's open. So this takes precedent well before something like Netflix. Next up, Google. What's up with Google? Google, Bard, AI, anything new here? Not really. Inside the prior day's range, yet still inside the prior day's range, but threatening a breakdown. I would be watching for a pullback, right? A deeper pullback here. Obviously, momentum is running out on the prior day's session. The day before that looked like a pullback was coming. So watching for breakdowns of these lows, and the pullback is into $100.50. Nothing's really changed there. Next up is the Zuckerberg Fantasyland Metaverse. It continues to be decently strong, holding up here at the highs. One thing I will note is that, obviously we have not closed a bar above 205.50. We're opening right on the level, so this is kind of a patience play. It does look a bit toppy here, and you are chasing higher highs, so I'm not thrilled about going long on this particular move, although it is an equal high break. What would I want to see to get involved, for example? Like break the prior two highs, pull back, and then go. That's the long trade. If you're trying to trade this as a daily break of the equal highs here, great. Make sure that we're above these upper wicks where clearly sellers have been hanging out. So you want to get it above 208 if you're trying to long Meta in the upward direction on a daily breakout of this flag. Otherwise, just like chopping around in here is exactly that. You've built out like a 3-day range if we go sideways today, and then we wait for information on the Monday session over the top, under the lows, and we'll take it in stride. Next up, NVIDIA, the stock to absolutely not touch on the short side. Shorts getting burnt repeatedly. Is it their time to shine? Maybe. Once again, momentum is drying up. Look at the solid moves here. Look at how, indecisive the market is as we're sitting on these highs. Whenever you see candle bodies that are so small like this, so small, it's just an indication that there's a lack of confidence from the market in this particular area. Don't get me wrong. We're still moving in the upward direction. We're making progress higher, but there's not a whole lot of confidence here versus what's going on here, right? So knowing that, I don't know new money longs are the best idea at the highs. Just like in Meta, probably wants to be a break and retest above 274.25 if you're going to do that, so you can place a stop underneath. We'll leave it at that. I think NVIDIA is probably ripe for a pullback, but I just don't want to be the first one in the door, to be quite frank with you. I don't want to be the one to short NVIDIA and squeeze in the upward direction. So we'll let that one simmer. Microsoft, same idea, lack of confidence in these couple of bars here. Threat is underneath these lows, right? I think we could see a pullback on today's session in Microsoft underneath prior low of day. It's going to be around 275.30s, and then just for the sake of time, we're speeding it up through Amazon here. Really nice balance actually forming in Amazon. I like this much better than what we're seeing in Microsoft, NVIDIA, Meta, even Google. I like this far better because a balance always gives us levels to trade against, right? So we clearly have a top defined, we clearly have a bottom defined. Recall that this is the double bottom neckline, support there on the Monday session, right? So it's just a patience play in something like Amazon, but I mean, the watch is quite clear. We're watching the lows for support, we're watching the highs for resistance, and if we break, we will reevaluate the charts. Okay, that's it. That's it for the open. Let's take one last look at the ES. Anything changed over here? No, not really. We're opening back inside the prior day's range. Here's the prior low of day. Once again, we're opening so close to it that it's really about determining where there's acceptance, above or below, and then 39.70 becomes the issue. All right, 39.70, prior low of day. That's what needs to resolve here in the ES. 9:24 on the clock. I'll just remind you in the last 30 seconds before 9:25 that today is Friday, obviously. Friday rules are in place. If you have a green trading week, you need to do everything in your power to keep it green. I'm not saying don't trade. I'm not saying don't take good setups. I'm just saying don't do anything foolish like oversizing a position. If you are red on the week and you are swinging for the fences here today, just take a step back and reevaluate. Is it really wise to be doing that? Probably not. You don't want to be going into the weekend here as the nice weather is approaching, right? We're right on the cusp of spring. You can feel it in the air. You can smell it in the air. You don't really want to be going into the weekend feeling all pissed off about the market, saying, oh, damn it, big outsized loss on Friday. I was trying to make up for a bad trade earlier in the week. Things just got worse, so on and so forth, So that's kind of what I'll leave it off at. But Friday rules in place. Be responsible on a Friday and don't damage yourself psychologically. That's really what it's all about. And then last up, coin, because Rebecca F does have a green cash bag, or excuse me, a green name, red cash bag. It's about to turn gold any moment now. But here's coin, obviously getting ripped apart on the sort of fraud stuff that's been going on over there, as well as the SQ Hindenburg report did not help. What do we see happening in the pre-market? Just getting acceptance inside of this chop zone. I would not touch coin with a 10-foot pole in this area, right? I don't think that there's any competitive edge. If we start taking out this high, over 70, yeah, we're looking for the gap to close up towards 78. If we're just chopping around through here, I don't really want to get involved, and the better shorts are underneath this kind of area at 55. So, it's just not, there's nothing here in this area that I would be overly confident about. As an individual bar, yeah, there was an oversold bounce yesterday, but we're already opening back on the lows. It's just nothing more than short squeeze, right? A little bit of short squeeze from anybody who positioned in the pre-market getting ripped out in the open. Okay, so that's all I would leave it off at. The daily chart is not suggesting that you have any edge. No edge here. I mean, something like a weekly, if you go out to a weekly, if you're trying to swing coin or something like that, you start to get like double top vibes. If we break down underneath the neckline, which is still that daily area we just discussed, 55, back to the lows we go, 30s. So that's something to consider, but we'll leave it off at that. All right. Thanks, folks. BA. All right. Last one, I promise. Last one, BA for Sharath, and then we're out of here. All right. This is the power of having a green name and being a channel supporter. BA, this is a weekly chart. Obviously flagged from a weekly perspective, but we know that we've got some issues to deal with on the daily. If you've been watching this one, it's been really, really tough to break the top of that range around 215. Anyways, for today's session, getting a little bit of a gap, opening towards the lows. It's not a true gap, but we're opening in this area of support, right? I would say what's the low here? 193, like that's it. I think you're going to get this choppy grind until that flushes, right? Because this is where the momentum came in from the new plane orders, right? When it really took off to the upside, it's got to be under 193 for like a larger flush in the downward direction, in my opinion, for BA. Otherwise, you're just, you're still holding on to that breakout candle low, right? The gap is underneath that. So 193 is the level. Based on the indications here, let's take a look at this on an hourly, and then let's also just go extended hours off so we can get the sense of structure here. Maybe on an upswing, like your target's 200, psychological 200. If we get a bounce off of support at 193, 200 on the upswing would be the target. Maybe something here to contend with, but 200 would really be the primary target. All right? That's going to do it. Hopefully everybody has a green trading day. We've got 9:28 on the clock, and the ES is pushing further into the prior day's range. Folks, keep an eye on 39.70. That's truly what I'm going to leave you with. If you're not in the Discord, join the Discord. It's linked down below, or you can type in the URL manually. Hope to see you in there. Have a green trading day. Remember Friday rules. Have a great weekend. And with that said, I will catch you in the next one.